What's up everyone? In this video, I'll show you how I grew my $170 account into something much bigger using just one method, a high win rate compounding strategy. This isn't some random system. I only enter the market when everything aligns. Strong trend, confirmation candles, and indicator crossovers. The secret? Managing profits with discipline, stacking up small wins and compounding them consistently. This compounding method is perfect for those who start small but want to grow fast without taking unnecessary risks. I'll walk you through my decision-making process, how I take precise entries, avoid big losses, and keep growing the account. Watch until the end, because this might be the exact strategy you've been missing. And if you want to learn it in detail, join my VIP group and master the system step by step. Don't forget to like, subscribe, and turn on the bell so you won't miss more powerful strategies from Mr. Rich. Let's get started. Alright guys, this time I've decided to enter a sell position. The reason is because the red line, which serves as support, was successfully broken by this strong red candle signaling significant selling pressure. After that, there was a candle attempting a rejection upward, but it failed to close back above the red line. This means that buyers were unable to push the price back above the broken support. In addition, I also noticed a crossover on the moving average indicator pointing downward. This signal gives me even more confidence that the downtrend is likely to continue. The combination of a support break, a failed rejection, and the moving average crossover provides a strong confirmation for me to enter this sell position. Let's watch together to see if this sell trade turns into a profit. Okay, profit. Let's open the market again and look for the next opportunity. In this market, I've decided to enter a sell position. The reason is because the price previously managed to break through the red line. After that breakout, the market trend has become increasingly dominated by bearish momentum. I'm also noticing that all subsequent candles are closing below the green line, which in my analysis serves as a trend line or dynamic support. This is a strong indication that the downtrend remains solid and is likely to continue. That's why I chose to simply follow the trend rather than go against it. In trading, following the established trend is often much safer and carries a higher probability of success. Let's watch together to see if this sell trade turns into a profit. Okay, profit! Let's open the market again and look for the next opportunity. This time, I've decided to enter a buy position. The reason is because the red line on my chart is acting as a significant support level. When the price dropped to this area, a green candle appeared, forming a doji pattern. A doji is a candlestick pattern that signals indecision between buyers and sellers. However, what caught my attention is that this doji formed exactly at the support zone. In technical analysis, a doji appearing at support often becomes an early sign of a potential reversal. This indicates that buyers are starting to step in and could push the price upward. That's why I decided to enter a buy position, believing that the market might bounce higher from this support area. Let's watch together to see if this buy trade turns into a profit. Okay, profit. Let's open the market again and look for the next opportunity. This time, I've decided to enter a buy position. The reason is because the red line, which previously acted as resistance, has now been successfully broken by price action. What's important is that all the candles after the breakout are consistently holding above that red line. This is a strong indication that the red line has now turned into new support, preventing prices from dropping back below. When the price continues to stay above a former resistance level, it's often a signal that buyers are starting to dominate the market and the uptrend is likely to continue. That's why I chose to enter a buy position, anticipating the continuation of the bullish trend. Let's watch together to see if this buy trade turns into a profit. Okay, profit. Let's open the market again and look for the next opportunity. This time, I've decided to enter a sell position. The reason is because there's a crossover on the MACD indicator, signaling a potential change in the market's direction. This MACD crossover happens when the MACD line crosses below the signal line, which is often a sign that bearish momentum is starting to build. This is a strong indication for me to enter a sell trade, because usually after a MACD crossover, prices tend to move lower. Let's watch together to see if this sell trade turns into a profit. Okay, profit. Let's open another good market and look for the next opportunity. This time, I've decided to enter a buy position. The reason is pretty clear. You can see it yourself on the chart. After the crossover appeared on the indicator, all the following candles have consistently closed above the green line. I use the green line as a trend line or dynamic support, which helps me gauge the strength of market direction. When candles stay above this line, it indicates that buyers are still firmly in control and the uptrend is likely to continue. The combination of the indicator crossover and the candles holding above the green line gives me strong confidence to enter a buy position. Let's watch together to see if this buy trade turns into a profit. Okay, profit. Let's open the market again and look for the next opportunity. This time, I've decided to enter a sell position in this market. The reason is because it's very clear that the market is experiencing a sharp downtrend. Candle after candle shows strong bearish pressure, with no signs of reversal at this point. In situations like this, I prefer to simply follow the trend because trading in the direction of a strong trend is much safer and has a higher probability of profit rather than trying to go against it. Let's watch together to see if this sell trade turns into a profit. Okay, profit. Let's open the market again and look for the next opportunity. This time, I've decided to enter a buy position, using similar analysis as before. Right now, the market is clearly in an uptrend. You can see on the chart that these green candles I marked with arrows are all large in size, indicating that buyers are dominating the market. After that, we did see two red correction candles, which are smaller compared to the previous green candles. This is completely normal in an uptrend, acting as a temporary retracement. Interestingly, right after the correction, another strong green candle appeared. For me, this is a sign that buyers are stepping back in and the uptrend is likely to continue. So I decided to follow the trend and enter a buy position. Let's watch together to see if this buy trade turns into a profit. Okay, profit again. Come on, let's open the market again. Okay guys, this time I've decided to enter a buy position in this market. The reason is because I noticed there are 4 candles that have closed above the green line. Previously, the market was clearly in a downtrend, but the appearance of several candles closing above the green line is an early signal that selling pressure might be weakening. From my experience, when multiple candles consistently close above a trend line, the green line, especially after a strong downtrend, it often indicates that a trend reversal to the upside may be starting. That's why I decided to enter a buy position, believing that the market has a strong potential to reverse into a bullish trend. Let's watch together to see if this buy trade turns into a profit. Okay, profit guys. Let's open another good market. This time, I've decided to enter a sell position. The reason is because I see a potential reversal happening in this area. According to my analysis, this zone is a strong resistance level. If you look at several previous candles, every time the price touches this resistance area, it always bounces back down. This means sellers are consistently defending this zone, preventing buyers from pushing prices higher. Although there was a crossover on the indicator, in my opinion, that signal isn't reliable this time because the resistance level carries more weight. So, I decided to enter a sell position, convinced that the candle currently touching the resistance is likely to bounce down again. Let's watch together to see if this sell trade turns into a profit. Okay, profit again. Let's open the market once more. All right, guys. This time, I've decided to enter a sell position. The reason is because after the red line was broken, the market was immediately taken over by strong red candles. This indicates that sellers are in full control, and the downtrend is very likely to continue. For me, this is a strong signal that there's no sign of reversal yet. So, as long as there's no confirmation of a trend change, I prefer to stick with the current trend. That's why I decided to enter a sell trade, taking advantage of this ongoing bearish momentum. Let's watch together to see if the sell trade turns into a profit. Okay, profit. Let's open the market again. Let's look for another good setup. This time, I've decided to enter a buy position. The reason is the same as my previous analysis. After the red line was broken by price action, several strong green candles appeared, dominating the market. This indicates that buyers are taking control, and the uptrend is likely to continue. For me, this is the perfect moment to follow the trend, because trading in the direction of a strong trend is much safer and has a higher probability of profit. So, I chose to enter a buy trade, taking advantage of this bullish momentum. Let's watch together to see if this buy trade turns into a profit. Okay, profit. I'm going to open the market again and do some further analysis. After taking a look, I think I'll stop trading for today. The reason is because the market is starting to look less favorable, volatility is dropping, and price movements are becoming less clear. In situations like this, I prefer to pause, because one of the keys to successful trading is knowing when to continue and when to stop. And it's amazing. My balance has now grown to $258,000. This is definitely the result of consistency, discipline, and a proven strategy that I've been using over and over again. For those of you who want to learn my high win rate compounding strategy and understand how to analyze the market in detail just like I've shown today, feel free to join my VIP group. Inside, I'll guide you personally so you can generate consistent profits from the market. See you in the next video, and may you always stay profitable.